The greatest wealth transfer of our lifetimes is here. Bitcoin is rapidly approaching $100,000 and time is running out. In this video, I'm going to share some candid thoughts on where the crypto market is going from here and how you can make the most of it. In this video, we'll talk about some categories that are poised to explode in the coming months, and I'll share some strategies that you can use to make informed investment decisions. Welcome back to Dynamo DeFi. On this channel, I've taught tens of thousands of people how to invest in crypto with on-chain and fundamental analysis. So if you want to learn more about that as well as decentralized finance, be sure to subscribe. Before I get into the video though, reminder that nothing I say is financial advice. We'll talk about a lot of different tokens and crypto investing strategies, but you still need to do your own research and understand all the risks. Now let's get into it. To start, let's talk about where Bitcoin's at now and where it could be going in the near future. And if we look at Bitcoin chart, it has broken out in a major way. It's gone from around $69,000 just a week ago to around $90,000 now. If you go back and watch my last video from last week, it was in the 70s. We looked at some on-chain stats, stablecoin flows. We looked at Bitcoin ETF flows to show that money was still flowing into it. And since then, it just completely blew through the 70s, basically skipped over the 80s in practically a single day. And then it broke over 90,000 not too long ago, and it's sitting right around there now. And the short reason why all this is happening is people are expecting the Trump administration to be way friendlier to Bitcoin and crypto than the current administration, especially with the SEC. And there's a lot of hope that the US builds a strategic Bitcoin reserve. And part of this was sparked by Senator Cynthia Lummis tweeting out, "We are going to build a strategic Bitcoin reserve." Obviously, she doesn't have final full say on this. It still has to be approved in the government. However, some people, such as Joe McCann, have pointed out that the US government already has over 200,000 Bitcoin valued at $16 billion because of Bitcoin money they've seized from people in the past. But there's a lot of hype around this, and some major investors, for example, Mike Novogratz, went on Bloomberg today and he predicted that Bitcoin would hit $500,000 if the US does a strategic reserve, because other nations are going to start to buy too. So basically, the idea here being that this cycle is going to be unlike previous cycles. You're not just going to have your crazy uncle FOMOing in. You're not going to have that guy that you used to work with texting you to FOMO in. You're going to have nations FOMOing in. You're going to have sovereign wealth funds. You're going to have companies. That's basically the thesis behind this. And so what you're seeing here is people front running that, right? They're trying to get in before the US government. And while you may not be early anymore, that doesn't mean that you're late. I'll say that again. Just because you're not early doesn't mean that you're late. You are still in before the US government buys, right? Not counting this forfeited Bitcoin. You're still in before other nations start FOMOing in. I mean, there's been a few like El Salvador, but major nations are not doing that. You're still in before wealth managers are recommending that people allocate a portion of their portfolio to Bitcoin. You're still in before every traditional finance institution is holding Bitcoin and incorporating it into their products. So again, just because you're not early doesn't mean you're late. And maybe in a few years you'll look back and you'll say that you're not early. But of course, there were people who bought over here in the teens. There are people who bought even before then. But there's also people, for example, who have been accumulating the past few years, and many of them have been watching this channel, and I thank you for that, right? It was tough making videos in this time when no one really cared about crypto and wanted to watch the videos. But those people are being rewarded for it now. But if you're just getting in, there is still hope, and in particular, I think there's a lot of opportunity in altcoins. And the reason why is that the way these cycles typically work is Bitcoin goes first, then it trickles down to other majors. So things like Ethereum, Solana, BNB, even Dogecoin. Dogecoin's up a lot for reasons we'll talk about shortly today. And then it starts to trickle down further to smaller coins. And the reason why is people, maybe like yourself, who are just getting into Bitcoin now, they say, okay, Bitcoin could double to $180,000. Wow, right? I mean, that would be incredible. But the 2x, that's a lot of people, they're not really in crypto for a 2x. They're in for a 5x, a 10x. And so they start to move down the risk curve, right? They go from Bitcoin, they say, okay, well, maybe I can get a 5x on Solana, right? There's a meme, Solana to $1,000, right? Or they say, maybe I can get a 5x, a 10x on this meme coin that isn't in the top 100, right? It's just on Dex Screener. So they start to move down. And then you also have people who made a lot of money in Bitcoin who say, okay, I'm going to take some profits, but I'm also going to try to multiply that portfolio. So they start to reallocate that Bitcoin into other smaller tokens. And so then you see people moving down the risk curve, and you see progressively smaller tokens pumping until in the peak frenzy, what you get is a situation where people can launch a token in the same day it'll go to like $1 billion market cap and then crash. And that's really when you want to be exiting. So that being said, where can we expect Bitcoin to go from here, and what can we expect from the next few months? And one of the things I want to emphasize here in this video, part of the reason I'm making this today, is probably it's going to go faster than you expect. And I'll show you some examples from previous cycles. From the time Bitcoin really breaks out to the peak, sometimes it's only a few months, right? There's people who have been accumulating for years. We've been in a bull run for a year already now. But from the time of like mass breakout and attention starts to really ramp up to peak, oftentimes it's only a few months, and that's just because of human psychology and how bubbles work. So to start though, let's look at inflows, right? Is new capital still coming into crypto? And the short answer is yes. Total stablecoins are up 3.47% in 7 days. Stablecoins are a solid proxy for capital in the crypto market, one of the best ones we have, because in most cases, these stablecoins, they're backed by real dollars, they're backed by short-term treasuries. So it's not just all self-referential like a lot of crypto, it's actually real money that is entering the market. And if we look at it from last week, it was $173.7 billion. Today it's $179.7 billion. So $6 billion in money entering. And that money has an outsized effect on the total crypto market cap, because a little money entering gets used to buy something, that gets used to buy something else. And I would guess that probably the effect is something like tens to maybe 50 to 1, something like that, in terms of every dollar stable coins that enters compared to the total crypto market cap that it drives. And then if we look at the other major source of new capital coming in, that's Bitcoin ETF inflows. I like to use this website, Farside, no affiliation, but I find it useful. It's a free website to check this. And we can see here that over the past few days, we've just been putting in insane numbers of Bitcoin ETF inflows. Multiple days in the past week with over $1 billion of inflows. Another day with $800 million of inflows. Just crazy numbers coming in. People are flocking to these Bitcoin products, again, trying to front run the US, trying to front run other nation states. And so how long do we think we have, right? And then we're going to talk about some potential plays based on this. Well, I think an interesting example is to go back to the last cycle, right? So if we look at 2020 to 2021, from the all-time high break, that's this line over here, to the first peak, we had around 118, 119 days. So just under 4 months. And if we look from that break to the second peak, we had around 330 days. So quite a bit longer. And although this was technically the peak, right? This one, in terms of attention, was in many ways the peak. So it's kind of a weird situation there. But let's take those forward and say, okay, so if we're looking at it today, where would that place us? Well, to start, it's interesting because we first broke the all-time high. That's this line in blue earlier this year. And then it was driven by ETF flows. We kind of hovered around there, dropped below it for a few months, and then broke it decisively after the election. But let's just see, okay, so if we start from over here, where would that put us? Well, if we use that 330 day thing, let's just see where that would put us. That would put us right around in February. And it's interesting because if you go back to my last video, you might remember that my mental model currently is that probably because of the hype surrounding new administration and the effect that that's going to have on Bitcoin, probably we pump massively going into inauguration, and I think there's a good chance that it becomes some sort of sell the news event, simply because people are going to get ahead of their skis. Stuff takes time, especially in Washington, D.C., and at the slightest delay, things are going to start to retrace. But so that would actually fit with that timeline, interestingly. And then if we look at from this one, let's take that 120 days from, let's just take it from this breakout over here. So 120 days from that would be right around in March would be that peak. And then of course, if we extended it out and said, okay, so what if this is the breakout and it goes out to 330 days, that would put us in October of next year. And both of those are interesting because, again, I think we probably get some sort of local top around inauguration, just based on psychology and knowing how people work. And then I think as the real adoption happens, I think the Bitcoin reserve is going to happen. I'm optimistic. I think regulations are going to loosen up on crypto and DeFi, as we'll talk about shortly. I think you're going to get that real adoption driven curve. And I think you're going to see things perform very well later in 2025, maybe actually extending into future years if we truly get an adoption driven super cycle and you get the macro conditions cooperating. And to add some more evidence to the fact that things are going to happen faster than you expect, if you look at the app rankings for top crypto apps where crypto is traded, Coinbase is already up to rank 12 in the App Store in the US. It was ranked 400 something a couple weeks ago. Robinhood is up to rank 18. People are flocking to these apps to trade crypto. And traditionally Coinbase being number one is considered a top signal. It's traditionally considered one of the bigger top signals. Now we're not there yet. The gap between rank 12 and rank 1 is pretty high, and there's probably going to be some volatility between here and there. But we're rapidly approaching top 10, right? And there's no guarantee we hit rank 1. So the point of this is basically, don't be surprised if you start to see some major top signals in the next few months, and that could be a sign that the market is overextending itself and is going to need to calibrate its expectations a bit. As far as price predictions on where Bitcoin could end up this cycle, that's not really the style on this channel. However, what I will say is disabuse yourself of the notion that $100,000 is going to be the top. There's been a lot of price predictions that Bitcoin will go to $100,000, but we've now gone from below our prior all-time high to nearly at 100K in only 1 week. The idea that you're going to run an entire crypto cycle in 1 or 2 weeks just doesn't make sense and isn't credible. I think we're going to go well beyond $100,000, but it's going to happen faster than you expect. And so how can you take advantage of that? And the first thing I'll say is you need to niche down. You can't be trading every kind of crypto. If you try to do that, you're going to end up being bad at everything. There's people who have been doing it for years. There's people who have teams helping them. Really what you need to do is find a niche that A, excites you, B, that you can find some kind of edge, and C, that actually has good fundamentals and catalysts going for it. And I'm going to talk about a few that make sense to me right now. So to start, let's see what's actually performing better than Bitcoin recently. First thing that will jump out to you is a whole bunch of memes. Peanut the Squirrel, Pepe, Dogecoin, Dog with Hat, Bonk, Floki. I mean, there's a whole bunch here. It's really leading the pack. And so the way to think about meme coins is, I have really two ways I think about it. One is it's like tokenized attention. So Peanut the Squirrel, huge meme from this week. There was a squirrel that was seized and euthanized by the New York state government, and it kind of became a rallying cry going into the election. And then Elon Musk was tweeting about it. And so this thing has gone from not existing to being a multi-billion-dollar token in a couple weeks. Just completely insane. So by financializing attention, basically it allows you, if you are early to something online, to actually cash in and make money from it, right? You've got that friend who always is like, oh, I was into that before it was popular. Well, now they can actually, if that's true, they can actually make money from it. The other way to think about it is that it's a form of gambling, right? Gambling is also a growing sector in the United States. People love to bet on sports. This is basically, I think, in some ways downstream of that, not to minimize it. And if you want to trade memes, there's a couple routes you could take. One is to buy the leaders, right? This goes for any sector. For example, if you buy Dogecoin, you buy Pepe, you buy Dog with Hat, then you're going to get some broad exposure to how the entire meme market moves. By the way, Doge, the reason it's doing so insanely well despite its large market cap is that Elon Musk and Donald Trump announced the new Department of Government Efficiency that Musk is going to be one of the co-leads of. And so Department of Government Efficiencies, DOGE, Doge. So now there's going to be a government agency that is named after the Doge meme. So that's part of the reason why this thing is exploding. But so that's one strategy. You just buy the leaders. Another strategy is you find your tribe, you find your circle of people, the right Telegram groups that are going to really be in the trenches, researching every new thing that launches, finding things that are starting to go viral and sharing it. That's great too. If you've got friends who can help you with that, that's usually more than a one-person job, not always, but it helps to have multiple people in on it, or just finding people who are going to share things that you can investigate. Or what you can do is you can go the route of on-chain analysis. And what on-chain analysis is basically you look at what smart wallets have bought. So by smart wallets, I don't mean wallets, the technology smart wallets. I mean wallets that have smart money, wallets that have proven on-chain that they've made successful trades in the past, and then looking at what they're buying today, right? One of the beauties of blockchain is it's public. So I have this video here on the channel, for example, how to do a basic strategy, finding and tracking smart money wallets on Dex Screener. I'll link that down in the description, but that can help you get on your way there. But my favorite sector personally is DeFi. And I think that there's going to be a ton of opportunities in fundamentally sound DeFi projects in the coming months. And the first reason why is that no other sector in crypto has been more suppressed by the United States government. SEC has cracked down on even the highest quality DeFi companies. Uniswap Labs received a Wells notice earlier this year. This is their response to it. So you have one of the most reputable, most used crypto applications that has made a honest effort to stay within the bounds of the law and to build a decentralized protocol. You can build your own front end on top of Uniswap. And they still were the target of SEC action. And so I think loosening up that pressure, taking the boot off the neck of the DeFi industry is going to really allow this entire sector to prosper. And the thing is, all the innovation is already happening in DeFi. The infrastructure is ready. The protocols to scale to hundreds of millions or billions of users, they are there. You just need the government to step back and allow the DeFi industry to actually innovate and launch products. And here's what I mean by that. If you look at the total value locked in DeFi today, it's around $169 billion. And go back, say, 5 years. All right, so let's go back to late 2019. It was around $600 million. So 600 million to 170 billion in 5 years. Go back further. Go back to 2018. You're at what, $4 million? $4 million to $170 billion in 6 years. If you saw that sort of growth in any other sector, you'd say, wow, that is some of the most insane growth I've ever seen, right? Nothing grows like that. With crypto, because it's so volatile, because you have these ups and downs, right? We had this surge in 2021, and then we retraced, and we're almost back to the peak from there. It's easy to feel like nothing has happened. But you zoom out and you say, okay, actually a lot has happened. And by the way, the quality of the applications, quality of onboarding, quality of offboarding, the user experience today is way better than it was back here. There's no comparison. Right here, a lot of this was based on very circular yield farming type applications, which I love, which I cover on this channel, which I've been covering on the channel since I started. But now then, we still have a lot of those, but we also have a lot more applications that are genuinely useful that people are using in their everyday lives now. And so DeFi is I think ready for prime time. And if we look at some other stats real quick, look at the tokenized real world assets. This is from rwa.xyz. On-chain, $13 billion of assets are tokenized. That includes private credit, That includes US Treasury debt, that includes commodities, that includes other sorts of tokenized bonds and stocks. And that has grown since the start of, let's go back to the start of 2021. That's grown from around $180 million to now $13 billion. And even from, say, the peak of last cycle, right, November 2021, it's basically done a 10x to $13 billion. So it's a totally different market now than it was back then. You now have billions of dollars of assets being tokenized on chain. And again, if you just have that government regulation lighten up a bit, allow the DeFi industry to do what it's already capable of doing, I think you're going to see this balloon to hundreds of billions of dollars, and you're going to see total deposits in DeFi, commonly called total value locked. I think that's going to easily go up to $500 billion, $1 trillion and more, especially because the price of a lot of these assets, which are many of them are digital assets, is also going up in the meantime. So how can you invest in this trend? Well, what I like to do is fundamental analysis for crypto. And again, one of the beauties of DeFi, one of the beauties of blockchain, is that all these financials for all these protocols, there's thousands and thousands of DeFi protocols, all their financials are all on chain. You can see their deposits in real time. You can see their fees that are being paid by users in real time. You can see their revenue in real time. My favorite website for this is this DeFi Llama website, no affiliation. It's a totally free website, but I find it extremely useful. I reference it all the time on this channel. But for example, I like to go to their fees section, right? Fees and revenue. Fees are fees paid by the users. Revenue is the proportion of fees that actually go back to the protocol or token holders rather than other marketplace participants. And what I like to do is I like to find DeFi protocols that are A, producing a lot of fees, especially compared to their market cap, and B, that actually have growing fees, right? We're no longer in the era of crypto where promises are enough, especially for DeFi projects. There's actually applications that are being used by hundreds of thousands of people, by millions of people now, and that are generating real money. So to look at a couple, right? We'll look at Radium and we will look at Aerodrome, two very solid projects. Both of these are decentralized exchanges, meaning that they allow you to swap tokens on chain. Radium is on the Solana network, and Aerodrome is on the Base network. That's Coinbase's chain. So we look at Radium, for example. We have their fees here. We do daily, weekly, monthly. We look at weekly, and you can see like really strong growth trend, especially the past few months, right? We have just, but what this means is that more and more people are actually trading using this exchange, and to the tune of tens of millions of dollars of fees paid every week, of which around $1 to $2 million recently has been going actually back to the protocol or token holders. Aerodrome is another great one. Again, Aerodrome is the leading decentralized exchange on Base. By the way, I have no affiliation with either of these projects. I'm just doing it as an example. Although I have met the Aerodrome team and I can say that I'm very impressed by them. So Aerodrome is doing $2.6 million of fees last week, $2.4 million the week before. You can see growing week after week. And all of that's going back towards revenue. So what I'm looking for with DeFi, we're talking about protocols that are trying to build the infrastructure for reinvention of the financial system. Good way to judge if something is actually useful is if people are paying to use it. By the way, another good way to judge is it something that you find useful? So if you, for example, are using crypto a lot, you're swapping tokens, you might ask yourself, which tools are you using to do that? If you're trying to earn yield on your tokens and yield on your Bitcoin, you might ask yourself, okay, which applications am I going to use to do that? Because if I find it useful, probably other people find it useful as well. And by the way, if all this seems like a lot to handle, that's okay. You're in luck. Every single week in my newsletter, dynamodefi.substack.com, I share some highlights of most interesting on-chain analysis from that week, including trending chains, protocols, etc. And if you want something a little bit more, then I also have a pro newsletter where I do a full overview of everything that's happening on chain, protocols that hit key milestones, as well as deeper analysis into a number of them. And then that premium membership also includes the Onchain Academy, which is in-depth 3 hours of content showing you how to analyze all of these things yourself. Another way you might take advantage of this growth in altcoins, DeFi, and all that is to invest in the chains where activity is happening on. And a few of the ones that are my favorites right now, first off, Solana. Solana has been the breakout chain of the past year. It's probably the chain I cover the most on this channel, and I've got a lot more Solana content coming in the near future, especially for beginners. But Solana is a great one. Sui is another one. It's a competitor to Solana in many ways because it's also high throughput. It's also an alternative layer 1 to Ethereum, and it's been one of the top performers of the year. Just watch out. It's got a lot of inflation coming in the future because the fully diluted valuation is way higher than the market cap. And there's others that are great as well that are growing. But again, to give you the tools to do the research yourself, if you go to DeFi Llama, you can see all the stats by chain as well. And I'll use Sui as an example here. So if you look at Sui, you can see the total deposits on all applications on the chain. That's abbreviated as TVL. And then you can also add other key stats to this as well. Some of the most important ones are volume. That's volume traded on decentralized exchanges on that chain. That's a good proxy for activity in DeFi on the chain. And then you can add stablecoins, which can be thought of as a form of liquidity on the chain. So you want more stablecoins flowing into the chain because that's naturally going to end up in DeFi. It's going to end up being used to trade for other coins. It's going to start earning yield, etc. And the great thing about these metrics is that they can form a positive feedback loop where as one or two go up, they start to feed into each other. TVL goes up. That means that there's more liquidity on the chain, which means that more people can trade. That causes APR on the chain to go up, which causes more TVL to flow in, causes more stable coins to go in. More stable coins go in. That leads to pricing increases, which causes TVL to go up further. And you have all of these variables interacting to push each other upward until inevitably, of course, it peaks and can work in reverse. But in the meantime, that's how you can have these chains blow up really quickly. So I would strongly recommend using these sorts of fundamentals to decide which chains are getting traction and are actually being used. And then finally, if you want to take advantage of this bull market in crypto, this is the hardest, but in my opinion, the best thing you can do is you could also try to start some sort of business. If you're a developer, then that's straightforward, right? There's many apps that need to be built, both on-chain apps and different sorts of data visualizations, other sorts of apps to assist with people who are using crypto. But even if you're not a developer, there's a lot you can do. For example, take this channel. I have over the past few years been posting several videos pretty much every week, and I've grown the channel from being rather small to having 51,000 subscribers. There's need for education businesses. There's need for legal businesses. There's need for financial services, consulting, marketing, anything you can imagine, whatever you're good at, whatever you do. There's probably an opportunity to provide that to people in the crypto industry and get exposure to it that way as well. Thanks for watching. Be sure to like and subscribe for more content like this. And until next time, this is Dynamo DeFi.